Let me tell you about a 44-year-old who inherited $250,000 from her father. Within weeks, she moved the entire amount into her savings account. Now she owes over $60,000 in taxes. And guess what? The painful part? This could have been avoided. If you or someone you know inherits an IRA, this is one of the most expensive mistakes you can make. So today I'm going to show you exactly what went wrong and how to avoid it. Hey there, I'm Andrew Rafal, founder of Bayntree Wealth Advisors. And listen, inherited IRAs, they're one of the most misunderstood assets in retirement planning. But before we go further, if you're not sure how coordinated your own plan really is, we've put together a retirement readiness assessment. It takes less than a minute. It's a simple, quick way to see how coordinated your plan really is across income, taxes, investment, healthcare, and overall planning. You'll see your results instantly on screen along with a few key takeaways to help you feel more confident of where you stand. The link is going to be right below this video. Now let's get back to the issue at hand. When you inherit an IRA and you are not the spouse, you simply cannot move that money into your bank account without tax consequences. See, that money has never been taxed, and the moment it leaves the IRA, it becomes ordinary income. In this case, $250,000 was added to her income for the year, which would have pushed her into a higher tax bracket. Now, the good part is there's no 10% early withdrawal penalty on inherited IRAs, but the distribution is fully taxable at ordinary income rates. Instead, what could have been done? Transferring the money to an inherited IRA, she withdrew the entire account in 1 year. That was the mistake, and that's where the $60,000 bill came in. So the mistake, it wasn't not taking the money. The mistake was taking it all at once. See, as a non-spouse beneficiary, she could have kept it and transferred it to an inherited IRA. There are no 60-day rollover protections like there are with your own IRA. So once you make that mistake, once it's distributed and it's sitting in your account, it's taxable. It can't be undone. A simple conversation ahead of time could have saved tens of thousands of dollars. Well, what is the smarter strategy? What would that have been? To open up the inherited IRA, keep the money invested, and spread the withdrawals out over 10 years while coordinating the distributions with your income. Why the 10 years? Because that is the rule where you have to take out the IRA over a 10-year time frame. So when we think about this $250,000, instead of taking that all in 1 year, maybe it was $25,000 per year. That keeps you in a lower tax bracket, which reduces the overall tax bill on this newfound money. This isn't about avoiding taxes entirely. It's about managing it intelligently. Now, once the distribution is complete, so once she did this, and the 60 days, more than 60 days have passed, you can't reverse it. There's no reversing once that money comes out. So what can you do if you've made this mistake? What can soften that impact? Here's a couple moves to look at immediately. Max out the retirement plan contributions that you have for the year. Max them out, 401ks, or you have a SEP or a solo 401k. Fund a health savings account if you have an eligible plan under a high deductible. Consider a donor advised fund for this year if you're charitably inclined. Great strategy there. You can also look at harvesting investment losses, coordinating business deductions if you have your own business. In a high income year like this, you got to look at every above the line deduction because it will really matter. The real lesson here is the most expensive financial mistakes are usually not bad investments. They're uncoordinated decisions. Inherited IRAs, a lot of times it's just mishandled because of the unknowing. If you or someone you love inherits money, talk to an advisor before you do anything. And if you found this to be helpful, just hit the button that's the like and subscribe so more people can learn about these strategies, and subscribe for more retirement tips from us here at Bayntree Wealth. We'll see you in the next video. Thanks for watching. Happy planning, everyone.